Hey everyone, welcome back to Corporate Decoder. Pool Corporation's latest filing is an amendment to a previous report, and it sheds light on a significant departure, specifically for their former president and chief executive officer, Peter Arvan. Quick note, this is not financial advice. Just my take on public filings for educational purposes. While this filing isn't about new financial results, it explains the severance package for the departing CEO, and understanding these executive payouts can reveal a lot about a company's culture and financial health. This document is an amendment to a previous 8K filing. Think of it as a correction or an update to something that was already reported. The key piece of information here is adding details about a separation agreement with their former CEO Peter Arvan. He stepped down as President and Chief Executive Officer on May 8, 2026. And the original filing didn't have all the details of his exit package. This amendment fills in those blanks. Now let's dive into what Peter Arvan will receive as part of his separation. It is not just a simple handshake and goodbye. Under the agreement, he is set to receive his base salary for a period of 54 weeks after his departure. That is over a year of his previous salary. On top of that, the company will cover his health insurance premiums for 12 months. This is a pretty common benefit in executive severance packages, aiming to ease the transition for the executive and their family. What is particularly interesting are the performance-based and restricted stock awards. Mr. Arvan is eligible to continue vesting up to 55,156 shares of performance based restricted stock awards. Important here is that this is still tied to him achieving the performance goals that were originally set. So even though he is leaving, there is a chance he could still benefit from the company's future success if those goals are met. He is also eligible to continue vesting up to 21,870 shares of regular restricted stock awards. However, all of these generous benefits are conditional. Mr. Arvan has to sign a general release of claims, meaning he cannot sue the company. He also needs to keep adhering to the terms of the separation agreement, which includes non-competition clauses. This ensures he doesn't immediately go to a competitor and use the knowledge he gained at Pool Corporation against them. There are also confidentiality and non-disparagement clauses, meaning he can't spill company secrets or badmouth the company publicly. Interestingly, the agreement also states that certain payments and benefits due to Mr. Arvan are subject to recovery by the company under their compensation clawback policy. This means if something goes wrong, like if the company has to restate its financials due to misconduct, they can reclaim some of the money or stock they paid out. This is a good governance practice to have in place. While this filing focuses on an executive departure, it is worth noting the company's context. Pool Corporation, or Pool, is a significant player in the industrial distribution sector, with a market cap of around $6.8 billion. They have about 6,000 employees. Recent news from early May 2026 suggests the stock might be trading at a relatively cheap level compared to the last 5 years, with some directors recently making stock purchases. This indicates that insiders might see value in the company's stock, which can be a positive sign, though it doesn't diminish the implications of a CEO transition. Looking at this executive departure, it is a standard, albeit substantial, severance package. The 54 weeks of salary and continued health benefits are quite generous. The performance-based stock vesting is also a common way to incentivize executives to stay aligned with the company's long-term goals, even after they've left. The clawback provisions are a crucial protection for shareholders, ensuring accountability. What this filing tells us is that the company is handling the transition of its top executive role professionally, with clear agreements in place to protect both parties. It also highlights the importance of executive compensation and severance in corporate governance. For the company, the focus now shifts to how the new leadership will steer the ship. The recent insider buying and the idea that the stock might be cheap are positive signals to watch. But the succession plan for leadership is always a critical factor for long-term investors. That is my take. Stay decoded. Find the tools I use for research linked in the description below. Like this video, comment with your thoughts, subscribe for more, and join our Discord for deeper dives.